What's going on, guys? It's Steve, and today I want to talk to you about how to invest in the stock market with no experience, no skills whatsoever. Is it possible? Yeah, because I've done it, and countless amounts of people have done it. You know, when it comes to investing and you hear things about it, you want to jump in it, the best thing to do is just go 2 toes deep into it, but you got to be smart about it. So today, what I'm going to do is talk to you a little bit about how I did it and how millions of people have done it, and how easy it is, and how it's overrated with a lot of things you might hear about the stock market, and how simple it is to set it up, and you can do it within an hour, and it's free. So all it takes is a little bit of time. So I want to get into it. So the topics I'm going to talk about today basically is how to set up your stock account, right? How to fund it, which is 2, and a couple of ideas that were passed on to me, or like advice that was passed on to me. Now, granted, I'm not a financial advisor. This is just something of a suggestion that you could look into. So I don't want you to do something or get it read the wrong way and say, "Oh, Steve done messed me up." No, I don't want to do that. But look, this is what it is. I want to advise. I want to just give things where, ideas that once you invest your money, if you don't know what to invest your money in, something that can gradually bring you into it until you understand what's going on, and then you can take it from there. That's basically what I'm saying. And the fourth thing is, and this is very important in my opinion, a couple of terms that you want to know that are, stock market terms. You find a definition of them. I'll give you a brief description of them today, but just things to know that'll help you evaluate businesses and whether or not something's a good investment for you, and whether you want to buy the stock or not. So without further ado, let's get into it. All right. Funding your account. Not funding your account, starting your account off. Now, me personally, my experience is when I first started getting in the stock market, I seen all these TV Ameritrade commercials. So as I seen the commercial, it dawned on me like, yeah, let me go and investigate and see what it's about. So as I got onto the Ameritrade account and I looked, how easy it was to sign up. And I don't want to put it in like this type of perspective because it's really not a comparison. But setting up a account is the same as setting up a bank account. Like if you did it online, it would be the same thing. The only exception is when you're filling out a money market account, a financial account with like a brokerage or anything like that, they ask you a lot of questions that banks don't ask you. Like, for example, and it's only for your protection and theirs. They'll say, is somebody working for the New York Stock Exchange, or is somebody in a business that can give you insider information about a certain stock or something, because insider trading and all that stuff is frowned upon, and you can go to jail over it, pretty much, because it's almost like cheating. But it's just yes or no questions, and then like they have the terms and conditions at the bottom. You have to check them off and all of that stuff. But it's basic information. So the 3 things I know you need your basic information. If you have a driver's license or something like that, which you don't have to have a driver's license, but they just use it as an ID. They ask for your social security. Everything is is safe. It's just like filling out for a bank, and all your stuff is private. Nobody can get your information. That's what I like about these accounts too. Setting up a stock account too. They're safe. They ask for your driver's license. They ask for your bank information. You have to have your routing number so they can connect the bank account to you to make sure. All of this is just basically to verify your identity. And all the terms and conditions that you'll sign and then agree upon, when you're setting it up. So that's the first thing. The second thing is, and it's pretty easy. You can get it done in about an hour, 45 minutes, if you're good with the keyboard. But it took me about an hour. The second thing is funding your account. Now, that's entirely up to you. Now, depending on which brokerage firm you go to, they'll usually tell you what the minimum is. They'll say, hey, okay, it's a $50 minimum or $100 minimum, but you don't need thousands of dollars like a lot of people say, or you don't need a financial advisor or somebody to sign off on you putting money into the thing. It's not like that. But what's key about it is they have what's called, now I haven't filled out a account in a couple of years, but they do have a thing called electronic deposit where you can instantly deposit money into your bank. Into your account, your brokerage account. But you have to be careful about that, where once the money is transferred, your bank might not show that it's transferred. So you got to wait. You can make trades immediately, but you have to make sure you keep an eye on your bank account, because it'd be having your balance will be wrong. So you don't want to take out that money or discount that money that they haven't registered that has been taken out yet, basically. So you can start stock trading within that hour of signing up. Another thing they do is, what they used to do, I don't know if they do it now. They used to have it to where they would deposit a small, to verify that the bank account is yours, they would put a small deposit, it might be 50 cents, 25 cents, into your bank account. And you'll look on your statements and to say, oh, Ameritrade deposit, 25 cent, 35 cent, and they'll do it twice. They might do 25 cent and then 18 cent, or they go 25 cent, 25 cent. And then when it happens, you'll call them and you'll give them your username and password and all that stuff to talk to a live operator. Once you talk to a live operator, or the number that they tell you to call, you'll call that number and say, oh, hey, I got 2 deposits in my bank account, just to verify you are who you are, and that'll get you rolling too, which is another added safety feature, security feature. So it's all right with me, and it's not a headache. It's really quick. You'll see it, call them, it's no problem. Once you get your money in there and everything's all set up, you can then pick your first stocks. Now with me, I had a problem with that because there was so many businesses, that I liked or named. I didn't know anything, so I was just winging it. So, with you, like, it's better to just have a plan. So if you're going to get an account, look up companies that you think are good investments for you, not what other people are telling you. This is your account. So win, lose, or draw, you want to take the responsibility for that, right? Not to scare you off, because I have no fears, and it's not really a fearful thing. Shouldn't even said it like that. I'm sorry, but it's your financial future, and this should be your decision. Basically, what I'm talking about. You'll make your first stock. Now, a suggestion that was suggested to me, that advice that I took, and looking back, I would tell, my kids, when they want to invest, if they want to invest, it's like pulling teeth even talking about it. But how 20-year-olds are. I would invest initially in what is called ETFs, electronically traded funds, or a mutual fund. So, the index fund. I would invest in the index fund. The reason why I would do an ETF, which is electronically trading fund, is it's a basket of stocks. So instead of trying to go through what I went through, is trying to pick 1 stock or 2 stocks or 3 stocks or hell, 10 stocks if you got the money for it. It's just choosers. It's the paradox where you're like, oh, I don't know what to pick. Everything looks good. To avoid that and the headache of it, what you do is, like me, I took the ETF and I went into VOO, which is the S&P 500, top 500 American businesses, the strongest businesses, bona fide, really good companies that are in America. So the advantage of that is, instead of buying a single stock right at the time, instead of having a single stock at the time that could fluctuate higher and lower, mess with the balance of my money, where I would see like drastic change in my balance of money depending on what the market did, I would have a basket of stocks to where, like, if one stock goes down, another stock would be stable, one might be going up, or it would cushion the visual aspects of seeing your money going up or down. And that's a good thing, because a lot of people are scared and hesitant when they come into the market, think they're going to lose money anyway, or all the bad things a lot of people have told them. And to see, your money going down a couple of dollars rather than 20 or 30 or thousands, depending on how much money you get, and then panicking, thinking something's wrong with the business, this is a more slower way. So I call like ETFs and index funds almost training wheels for investment. So that's something you might want to look into, But it worked for me. Maybe it'll work for you guys as well. The last thing I'm going to talk to you about, and then I'll wrap the video up because I'm going to make this short. I'm trying to make this as easy as I can. You want to look around when you get your investment account, like when it shows like the stocks and all the stuff, like when you pick a stock or whatever. And you usually see this when you pick singular stocks, like, you know, like a regular stock where it's just one name. It's not the ETFs, because a lot of ETFs don't have some of these terms on there, or they don't apply to an ETF. But the terms I want you can write these down. I'll go slow with them, and I'll try to explain them best I can. The first term you want to know, you want to write down, is your annual dividend / yield. You'll see it on there. When it shows the stock and it shows like the little particular stats of the stock, you'll see that. It's called annual dividend / yield. What that is basically if the stock you have pays a dividend. Now, some stocks don't pay dividends, especially growth stocks, where they take their money and they invest it back into the business rather than turn it over to you, the shareholder, which is what a dividend is. A dividend is every quarter, which is 3 months, or every month, depending on the type of business it is, they will pay you a profit of your ownership, because the stock is ownership of the company. You get the proceeds of the amount of money that you've put in. So say you put $100 in the stock, and per $100, well, per share, say like the stock is $10. You put $100 in, so you get 10 shares. If each share pays $1, well, if each share pays 25 cents, each share, I'm sorry, every quarter you will make $2.50 off of that $10, which is like a 25% dividend yield. But the annual dividend is basically the amount of money, because it's a / annual dividend / yield. Annual dividend is the amount of money per year you will be getting paid for your amount of money that's invested into that company. The yield is the breakdown of what that amount of money is in percent per share. That's the first thing. The second thing is historical volatility. Now, this is an important thing too, because with historical volatility, what it basically says is how often how stable the stock is with fluctuations of the market. Meaning, if I give you an example, and it's not a bad company, I'll just give you an example. Tesla. Tesla is a roller coaster ride. And Tesla today can be $400. Then from something breaking in the news, or just in just a rush of investors jumping into it, tomorrow it can go up $200-300. I've seen it multiple times. So as a beginning investor, you don't want to deal with that if you don't have to, because it'll give you a heart attack and you'll have a wrong experience in the stock market. And you'll think, a lot of times people take that and it'll put a bad taste in your mouth, and you might have it where all stocks are like that, and they're not. So basically, historical volatility is how often the stock jumps up and down according to things in the news, or how steady. And that has nothing to do with the business. The business is the business. The stock, you got to separate the stock from the business a lot of times. What the business is and the fundamentals of the business dictates what the stock is, not the other way around. Stock prices could drop, and it has nothing to do with the business operating day-to-day operations with the business. And that's one thing you have to differentiate when you're trying to be a investor. So historical volatility, basically when the stock goes up and down according to different things you hear in the news, or just sentiment from the consumer. Third thing, earnings per share. Now you need to know the earnings per share, right? Fourth thing, PE ratio, price to earnings ratio, right? You have to look for the last one here, I have written over here, is the percentage held by institutional investors. Now, institutional investors are basically corporations and people that are hired by corporations, stock traders that buy these shares and hold them. So you see, companies buy stock of other companies too, which is basically these institutions. the percentage of institution, like it might say like you got a stock like Apple. Apple might have it'll say percentage held, like when you look at the stats, it'll say percentage held by institutions. The percentage held by institutions might be 80%, right? So 80% of the institutions, so 8 out of 10 institutions hold Apple stock, right? Now, it could be a good indicator, as far as, what you want to do, as far as like, oh man, a lot of big corporations own Apple stock. So it might be something there. And, it all comes down to you, whether you want to take that advice or not. But basically, I'm just trying to tell you what the terms are. The terms basically mean how many corporations and big companies own this stock that you're particularly looking at. So, I mean, I just wanted to drop some knowledge on y'all today and get a video out. I was thinking about it, and I was like, I looked at a video I did earlier, and I was like, well, I mean, there's some things I left out, and there's some things I can improve on. So I figured, I'd drop another video. But listen, I hope you, if you find this video to be educational, I appreciate you if you send a subscription, like and leave a comment. Tell me how I did. I mean, I'm new to YouTube. Tell me if you just signed up with a brokerage firm and how's it working out for you. I'd love to hear about it. And I'm going to just keep going and keep growing this YouTube channel. And I appreciate you spending time with me today. And I'll see you later. Thank you so much for joining me. And take care.